Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is September 16th, 2024, and we're going to take a look at Bitcoin, of course, as always. And we're going to start with the daily, even though we are going to focus on the weekly and probably the 5-day. We'll take a look at that 5-day chart again because it's nice and clean. But we'll start out with the daily here. Pretty easy setup going on here in terms of trend. We now have a confirmed downtrend, so we have the lower low on a close. Yes, it is a higher low wick, but this was the uptrend right here. We had that short-term uptrend on the daily here with the trend break down here at that 52,500, and I believe it's around, what's the close at, 54K essentially. This equal low on a close at 54K here. Slightly lower low on a close, to be fair, but still it's within the margin of error there for equal lows on a close. Now we do have a lower high that got locked in on Sunday's candle, and and yesterday was just continuation to test down further. Pretty standard stuff once putting in a high here. Now it is Tuesday's candle that's open right now. By the time this video goes up for some of you on the East Coast or on the other side of the world, it is already Tuesday. It is still Monday for me. It's just I'm recording this a little bit later today. Now, in terms of changing the trend here, pretty straightforward. If we see closes back above this lower high at around 60,660, or I would say 60,700 to be safe, depending on your chart here. Any closes back above there, and we would have a trend break again. Now, I would want to see closes, obviously it would put in a low if it did it from right here. But realistically, anywhere between the lower high and the equal low close down here at around that $54,000 and the higher low swing here as it relates to this low over here at 49K, anywhere above 52.5 is where I would want to see Bitcoin put in a higher low. So doesn't matter where it happens. We'll look at some support and resistance at some likely areas and define some criteria or conditions based on a close. But, we're looking for a higher low from here if we're bullish to come up and take out this 60,700 or so. Above there, we've got an uptrend. So obviously anywhere below 52.5, this is continuation. So we would have the lower low, lower high, and then of course lower lows. So that would just be continuation and confirmation of further downside into some of our areas of interest that we're going to get into right now, as a matter of fact. So let's go ahead and turn off this part of our chart here. And trend is pretty easy right now. It's nothing too crazy. It's been pretty straightforward for a long time, as it usually is. It's only really goofy when it's kind of making random kind of trendless patterns, like higher highs with lower lows and then a lower high with a higher low, that kind of stuff. Right now it's pretty straightforward though. All right, so let's go ahead and turn back on our accumulation distribution zones. And I've made this argument before. It could be that we're already seeing a distribution structure occurring here with a local reaccumulation. That could be in play. I don't really care because we have defined criteria, right? So essentially right now, if Bitcoin were to, as you can see, losing that 58,400 level, as I've talked about so often, does bring on the potential for downside risk to this 55,850. That's this closing low over here. Anywhere below there, could it swing that wick low at 55.5? Sure. But if it starts closing below that wick low, it's in the danger zone, obviously. And if it closes below 850, of course, it's already in the danger zone. And that's risk on down to around 53.5, or this wick low of the second major downtrend of this range. So anywhere below there, I'm looking for that 52.5 to get tagged in our target one of distribution area. As you can see here, we have not gotten any closes below 53.5. So if we did see closes below 53.5, yes, that wick low is fair game at 52.5, but it's very likely that if Bitcoin closes below this area that, it's going to run a bit lower than that. And of course, if it closes below there, we're looking for target one of distribution, and technically even outside of that to the top side of target two, being fair game between $53,000 and $49,000. anywhere below there, I'm looking at essentially the 2022 bear market lower high on the monthly. Of course, weeklies as well, fair game. But that's around 45.5 to 48.240. This 49K to 45.5 is essentially the area. You could even give it room 45 to 48. Just generalize that area. Now, you'll notice that I'm missing the Bitcoin electrical cost, mining electrical cost here. So let's go ahead and talk about the upside first, and then we'll go ahead and throw on the mining electrical cost here in a second. But if Bitcoin can claw its way back above 58.4, even in some lower term time frame levels, more like a 4 or 6 hour, then I would start to look back to this local high structure, right? Somewhere around that 60,000 to 60,300 by the bottom side of the recover zone here. Obviously, that's this low side area that was the higher low over here before the uptrend after the first big downtrending move in this range. So, if it did make it above there, then I would be looking for that 60,700 high to potentially be closed above on the daily if you do start to see price heading up that way again. And then it's fair game, look left locally to 61 to 61.8 around these wicks and this close open. And above there, 62.8. Anywhere above there, we mark up to the top side of the recovery zone here at 63.8 to 64K. And then the big one is going to be the same criteria on the 5-day and weekly that you're going to see here in a moment. But $65,000. Any closes on the daily, we start looking to those higher term time frames to see if those are also closing above. Of course, the 5-day is going to close off schedule with the weekly. So we would want to see a 5-day closure above there because that would be a 5-day downtrend break. And then, of course, we need to see a weekly close above there at $65,000 to break the weekly downtrend. So keep that in mind. And above there, we're looking, 65.5. By the way, 65.5 is the first high from 2021 before a big downside move into the upper $20,000 area to go in for daily reaccumulation. And in fact, it was just a straight up Wyckoff schematic for reaccumulation, hitting the spring and just running from there. Big move down in September of that year, if you might remember, just like we were getting big moves down this September. But and then it legged up to that $69,000 high from the prior cycle. Above there, there is local resistance here. That's this the lower high before the higher low here at 65.5 to 67,272. I've pointed this out a lot. 67,272 is the first major lower high. You're like, no, these are lower highs up here. Yes, but this was in the context of higher low structure. This was the first big trend break down. Was this big move down and then pop up to the lower high at 67,272. This is a major pivot in the range. You can see how even when it reversed off of the 60,300 area, it found resistance there, and then price sat on it when it topped out at the double top there at $72,000. It tried to hold that area and then found it as resistance for the second lower high. This was the first lower high of the second big downtrend up here at 68 to 70. But the second lower high tried to hold that area at around that 65.5 to 67,272, pinned it perfectly, down. Then it made that high at 63,800 or so. Obviously, when Bitcoin worked its way back up to 65.5 to 67,272 at that pivot zone that I have identified, you see it found resistance after the big second downtrend of the range here, got up above it, pinned that 67,272 before working its way up to the first lower high of the second downside move there at 68 to 70. Big dump off. And I've mentioned this before, the big first lower high, right? So we had the big trend break to the downside after this this uptrend here. So we've had two major uptrends and two major downtrends. Of course, we have the third major downtrend. We've got the third major uptrend here. But the first lower high, so we had the lower low, lower high here, is a bit of a structure change. It didn't come in at the top. We actually made a higher high wick and a close up here at 68,300 and $70,000 respectively. So the first big lower high is actually this guy here between 60,000, give or take 700 to 800 on the close, and 61.8. So I would want to see that area recovered, and then of course we start looking at that 63.8 to 64K, and then 65 for that longer term time frames, especially. But if it's closing dailies above there, we just look to those longer term time frames to see if those are going to close with it. And that would look pretty good for an upside move to that pivot zone at 65.5 to 67.272. Above there, 68 to 70, and then 70 to 72, and then so on and so forth, back to the highs at 73.835 and above. I don't actually think, to be quite honest, I think even when Bitcoin does eventually break 65K, I think we're going to see structure built, and I bet you it runs the highs and pulls back. But that's just, I'm prognosticating at that point. That's just purely, anecdotal. That's my opinion. So, we'll gauge it when price actually begins to change structure. So right now we have a lower high, we have a lower low. What do we need to see? Equal lows or higher lows, above $64,000 preferably, and at worst above that 62.5. So, or 50. I'm sorry, $54,000 preferably, and above 52.5 is where we want to see higher low equal low structure build that takes out this the 60,700 or so, and then that would start to look good for the bulls, at least in the shorter term here on the daily. And then we would look for that to bleed into the higher term time frame. So let's go ahead and look at volatility. As this usually goes, I talk about trend because that's part of my system, is to look at trend, support and resistance, volatility, and then momentum. The first three make up the fourth. They're all equally important. You want to look for the confluences across all of them. So let's go ahead and turn on what I use to measure volatility, which is a triple Bollinger Band set. This is a free indicator. You can find it in my Bitly link in my profile on X, or in the link in the video description down below if you're watching this on YouTube. It's a free indicator. It is private right now. It's being worked on in the background, devved out, all that good stuff. It's going to have signals and other things coming to it pretty soon, along with multi-time frame levels, so you can compare the band levels between different time frames. But for right now, we only need to concern ourselves with the daily. Very, very clear right here. Anywhere below the basis, likely from a volatility standpoint, going to head down to the lower first, which just so happens to be right there at 55,850. Anywhere below there, the bottom side of the danger zone is fair game. From a volatility standpoint, the lower second is just above $54,000, coming in at 54,200. So any closes below there, very highly likely that it's going to get expansion down into that 53.5, possibly even testing this low down here. At minimum testing, especially on closes below, 54,200, we're likely looking at it already running 54K and under down to that 52.5. That doesn't mean that it's a death sentence as long as it's closing back above, 53.5. Even in the lower term timeframes, it can swing down below there. You just want to see it closing back above 53.5. That has been pretty consistent here across these lows. Anywhere below there, obviously, it's expansion to the downside. We're looking at 53 to 50 and that 49K wick fair game and lower. To the upside, above the upper first, likely going to go test the 60,000 to 60,300 bottom side of the recovery zone. Anywhere above there, you can see the upper second sitting there at just right around. What are we looking at? Just right above 61. Sitting at 61, almost 300. So again, 61 to 61.8. Anywhere in here is fair game. Above there, 62,800, which is right around the upper third. Above there, we're looking for expansion up into 63.8 to 64K, and probably going to test that $65,000 area. So we do have quite a bit of confluence with the bands here. Let's go ahead and check on a few other things. Let's go ahead and look at RSI. Well, we have a bearish divergence. This is a continuation drive. So when you see a continuation drive, otherwise known as a hidden bear div like this, it doesn't necessarily mean that it's going to continue with its trend. In this case, a confirmed downtrend. But it's at least looking for moves back down, which thus far, because we were above the basis band, we have seen like the first part of that move back down already. The second part would be down to the lower first, around that 55,850, and then third part is going to retest the lows and possibly lower in terms of continuation on expansion, so on and so forth. It's still sitting in and around some pretty heavy support, to be quite honest. So if it starts to lose it, danger Will Robinson for the bulls there, but nothing too out of the ordinary here. Let's go ahead and follow this up with momentum. Daily is, in the bullish control zone, almost in the overbought zone here. Looking a little tired, a little weak, obviously, with that high put in. 58,151 is the pivot number, meaning that if Bitcoin can close above 58,151, then we would see, momentum remain to the upside, at least for like today's closure, which it's in the Tuesday candle. Yes, I'm talking to you on Monday for me, but it is in the Tuesday candle. So that number is only good for Tuesday. We're likely going to see momentum like be right on top of price, and or be somewhere around the $60,000 region. So you do want to see Bitcoin kind of get maybe a bullish reset or hold this area and go sideways and kind of turn that back up if we do see a cross down below on a close below 58,151. Bitcoin is currently trading about $100 above there, about 150 or so, 140, 150. Doesn't mean it's going to maintain that, but that is something to be aware of. So let's go ahead and compare this to the 5-day and weekly structure, because there is a few important things to point out here on the 5-day and weekly. And then I'm going to give you some important things to pay attention to, as we are not going to be talking, for a day or so. And then Wednesday, we do have the FOMC meeting. So the Fed rate decision as well. Let's go ahead and look at the 5-day. This is like so clear. Like what, I don't know why I was having such a tough time. This is so clear. And now what I will tell you is the 5-day high was 58,119. So basically 58,120. Where was the close? 58,200. Technically, this set a low. Yeah, it did. Even on RSI, it did set a low. This is not a very inspiring low as it stands right now. What I would need to see to kind of really start to confirm that this is going to head higher is closes back above 59,500 on the 5-day, especially above 60,300. Oh, hey, if we were to turn on our accumulation distribution areas, guess what lines up with that area? Bam, bottom side of the recovery zone right there. So just so you know, that's the area that needs to be recovered right now. Above 60,000, 60,300. It's got a fair chance. Obviously, we need to see this last high taken out. This is the same lower high in the daily at that 60,700 or so. We need to make its way above there, closes above there. We're likely going to go and test $65,000, which is this wick high. This would break the 5-day downtrend. This is a nice clean chart as it compares to the weekly. So I did want to make sure you understood how the 5-day looked versus the weekly, as we're going to switch over to that in just a moment. But, we've got, the higher high structure, higher low, lower high, lower low, lower high, lower low on a close and a wick, lower high, lower low close, possibly a higher low swing. That would look, start to look good. We would need to see a trend break above 65. We would still need to see higher low structure develop from there, at minimum on another swing. If it didn't do it on a close and it just started to green candle its way to the heavens, we'd at least want to see a swing. But we do preferably want to see a closing higher low on the 5-day after getting a trend break. But it's not always the case when we're looking at post-halving periods and Bitcoin going on the run and actually getting that blue sky breakout. So I'm not going to hold it to that stringent of a structural look. 5-day momentum pivot is going to be, what do you know, 59,750. So again, above $60,000, things start to look a little better. Above 60,300, reclaiming that bottom side of the recovery zone is going to look great for at least a test up a little bit further to try and break the daily downtrend. And obviously, if you're seeing the 5-day, we're probably, turning, then we're probably looking to the upside. Now, the 5-day just opened, so we have 4 days and 20 hours. 420, there you go. What a nice time. I waited 4 hours just so we could get a 420. Can we get a 69K test just so we got a 420, 69K? Just one wick up right now. That'd be great. Anyway, just for the memes, come on, Bitcoin. You've done it before. All right, so let's just go ahead and take a look at the weekly. The weekly is a mess in terms of candle structure. It's very, very ugly. Pretty damn clean over here with the higher high, higher low, lower high, lower low, lower high. We have a higher low close, lower low wick, lower high, possibly, maybe a higher low swing or wick with a closing lower low. If it can set it, what do I need to see? At minimum, you're going to see most indicators fire off around that 59,825. So again, like we're looking just above that 5-day momentum pivot. For the weekly here, that would be a technical higher low. I still need to see it taking out that 60,700 by the end of the week. If it were to do that, then at minimum, I would be looking for this candle structure to be fair game. That doesn't mean it's going to get there. There is this overhead resistance right around that 61.5, 61.8 level locally on the daily. You can see how this area was a rejection initially upon that second big downtrend here on the weekly when it was pivoting off the lows. It did act as resistance pretty much perfectly right there around that 60,500. And we would need to see that area reclaim. So above 60,700, go look at that 61.5, 61.8 on the daily. As long as we're getting closes above there, then I would be, from the weekly time frame perspective, I would be looking for it to test this lower high at $65,000. It needs to close above there on the 5-day. Also needs to close above there on the weekly to get a downtrend break and try to retest the highs again. So, in order of the daily areas that I showed you prior. Now, from the weeklies, I didn't show the bands for the 5-day. I'm not really that interested just yet. Maybe as we get towards the end of the week, we'll take a look at it. But, riding that lower second with contraction in play, getting a close back above the lower first from a volatility perspective tells me that if it can start to close back above 60,700, it's going to test the basis. The basis currently at 62,400. Now, if it didn't come up and test it this week and it ticks down again, we're likely going to find it somewhere like $1,000 lower. It's like 62, 61.8 level, that area that I was just talking about. So just be aware of that. Anywhere above the basis, then we just look left. We're looking at the close open on the weekly at 64,251, $65,000 there. So that would be the next area, and then up to the upper first there at $67,000. And remember what's up there, that pivot zone, the first lower high of this entire move on the daily was at that 67,272, slightly above the weekly upper first. So we do have general confluences to the upside in terms of overhead resistances between, horizontal support and resistance and volatility levels. If Bitcoin were to drop the lower first, well, I can tell you right now, bulls, that would not be a good look. We're likely going to run the lows, right? So even during the daily candles, if you do see the weekly lower first here at 57,800, so not far from where price is, to be quite honest, then I would be looking for it to head down, and everywhere down to the lower second is fair game. And that's that 53,173. So basically 53.5 to 53K, possibly testing the wick low over here or swing low at 52.5. So anywhere lower than there, and we're looking lower again. As I mentioned earlier, into some of those distribution areas, that 49K wick is fair game, essentially between 49 and 53. Anywhere below there, we're looking at the prior cycle bear market lower high on the monthly at around that 45 to 48, 45 to 49, if you like. If you want to incorporate those daily areas, by the way, 49K was the ETF high. And of course, we had we had price spike right into that during the Japanese yen carry trade dump off, which was only exacerbating a move that was already in progress, by the way. It was already a downtrend. That was not the reason that Bitcoin was in a downtrend. It was just exacerbating the hunt for liquidity. That's all. Weekly, in terms of one thing that I have noticed is the weekly it's been rejecting the simple moving average here. So when it does get above, even if Bitcoin's heading down, that will be a sign that things might be changing. That is a 12-period moving average. Let's just take a look at the bearish control zone. That's at 45,487. So basically 45.5. That is literally the bear market close open. That bear market lower high is 45.5. So that's fair game to test the actual edge of the bearish control zone there. Midline is going to be 59.5. Where's the SMA? SMA is going to be 60,800. So again, 60,700 to 800 would be a lower high. That's the lower high in the daily that it just put in. Essentially, it's 60,660 or something. So basically 60,700. That is where the weekly 12-period moving average is. We start seeing a close above there, and then the weekly start to get above there. Starts to look a little bit better. It's not one signal. You can't take the crossover signal itself, but if it has confluence with the other things that we just talked about, then things would start to change, at least for a test up to that $65,000 at minimum. Would be in the cards. 57,715 would turn, and you can see Bitcoin actually did turn its stoke. It's just the K over the D read here. We need to see it close this week back above 57. I would say 800. I would give it $1,000 or $100 rather. It's 57,715. This oscillates around the price right now, so I would say 57,800 on a close by the end of the week, and we'll check up in this on Friday again when we look at the weekly before the weekend. But this is something to pay attention to this week, because we could get, this is a bearish control zone test. Now, again, this is a regular Stoke, not a Stoke RSI, so don't get them confused. Stoke RSI measures the velocity of the RSI. We're already referencing RSI. I don't need a momentum indicator for a momentum indicator. And in this case, I'm using a regular Stoke, which is a measuring close over close price momentum. So in this case, this is actually valid bearish control zone bounce, just like you would read it on a regular RSI. This is a completely different indicator measuring the daily closes momentum. But in this case, if it can turn it, I would start to look for a low being set, and at minimum, and then a test at that $65,000. But it's a long week to go, and a lot is happening. So let me go back to the daily. We're gonna flip on all the fun stuff so you can stare at my levels again, and while I let you know what's happening, this week on Wednesday, we have the Fed's rate decisions. And you might be saying to yourself, well, that could drastically change the market. And it's, the market will go up if this happens, or down if this happens. Realistically, it's already in a downtrend. So if it's bad news, it's going to continue to go down. If we're starting to see, which we do see, the potential for Bitcoin to pivot off of some of these key areas above 55,850, as long as it's not breaking down from there, it could coincide with a low being set, maybe a higher low. If we have so much traffic down here on the lows, could it do like a fourth bounce down there? Sure. It starts to get a little dicey though, in terms of momentum on those higher term timeframes to the downside. But, it's one of those things of like, could we go into Wednesday and then see a pivot and everybody's going to credit that the Fed saved the market and shit? Well, realistically, we already have the scenarios on our charts. As long as it's above, for me, 55,850, on daily closes, it's looking fine to try for a higher low at some point during the week. And then on any closes back above, that 60,700 lower high here, we have a trend break with a higher low in place. As long as it's above, 54K to 52.5, then it's a higher low, then a trend break. Thus we have higher low, higher high structure, and price would be heading up, right? So could that occur on Wednesday? Sure. I mean, it takes time for some of these things to work themselves out. When looking at the 4 hour, for instance, it's got a chance to start bouncing. It's not ready yet. As I'm looking at it right now, 58,250 or so. It doesn't look particularly strong. Maybe another close or two if it can maintain this zone and regain, 58.4. Sure. It's got a chance to try and set, try to break this little short-term downtrend here on the 4 hour and then head up and retest $60,000. Sure. I'd be very cautious. The 12 hours turned against price right now in terms of momentum. But the 12 hours also right on the basis, which is where I would want to see it bounce down to the basis and lower first. So when we see an expansion down or a walk down of the bands like this, when it reverses and hits the upper second, upper third area around overhead resistance, and then comes back to the basis, lower first, those are prime areas for bounces up to try and maintain this trend. Even though it would be a trend break, it would be a deviation of trend if it did that. I love this setup, to be quite honest. What I will tell you is, it needs to close back above basically $60,000 to turn Stoke back to the upside. I don't see any bearish. There is technically hidden bear divs all through here, but realistically, there's no in-trend bearish divergence right now. Hidden bear divs kind of already played out to the midline of RSI here. This has the potential to try and as long as it's holding that 855, 850, where that lower first is on the 12-hour. Same thing that we talked about on the daily. As you can see, the confluence between the two. Lower first on the daily is the same area, lower first on the 12-hour. So that would be the area I'd want to see hold. And even better if it's holding above the basis band, which is the 20 simple moving average. Now, all of that being said is the real thing that's happening this week, all week, is people are rolling out of options into other plays for longer term options dates. We do have the quad witching on Friday. So this is a pretty volatile week. We got a lot of stuff coming up. Wednesday, we got FOMC. We've got liquidity rolling basically all the way into expiry on Friday. And then we're probably going to see the remainder of that liquidity start rolling into next week on Sunday's open on the 22nd. So just understand that that's the kind of lay of the land right now. And do not be afraid. Look for opportunities. And I will talk to you again on Wednesday, where we will talk about what happened with the FOMC meeting as it relates to price action. We'll see how some of our levels played out. So you have a wonderful morning, afternoon, and evening, no matter where you... Oh, okay. Let me try that again. I got to do the outro right? Okay. I'm tired. It's very late. All right. So you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.